If someone has completed over 8,000 real estate transactions, I would think it's pretty safe to assume that they have a good idea of what's happening in the housing market and they can read what's going to happen in the future. We'll talk about that in a second. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate. Hope you're doing well. Today is June the 29th, and guess what? The end of the month is approaching, and it looks like half the year is almost done as of tomorrow. So once again, hope everyone's doing well. Let's talk about stuff that's important to our market. But first of all, if you haven't checked out my video playlist on the top 10 reasons why we will have another housing crash or crisis, once you do so, I suggest you do so. You can check it out there. It's in the channel here. It's a playlist. And guess what? I've got an accompanying document. If you want to download the top 10 reasons why we will have another housing crash and crisis, go to housingbubble2.com, input your email. You can download my document, which is my narrative that supports the videos that we talk about in that playlist. All right, guys. So what we're going to do is we're going to follow up last video, which we discussed, what's happening in the marketplace, which is the feds actually granted an extension on the foreclosure and REO eviction moratoria. Now, normally I would not be happy about any more extensions because it's kicking the proverbial can down the street, as we know. But this time around, they basically stated that any extension which was given would be the last extension. So we had June 30th. It's now being extended to July 31st. After July 31st, according to what they stated, this is the last extension. There'll be no more foreclosure and REO eviction moratoria, which I think is positive news because now we can get the market moving again and engage where we have to engage. The CDC, they jumped on board as well too, saying that they basically are extending their renter or like tenant eviction moratorium. Same thing, they also said that they're doing this one last extension. So after July 31st, basically it'll be open season on eviction. So we have that to deal with in the future. Now, not to be outdone, the CFPB, which is the Consumer Finance Protection Bureau, they're letting foreclosures resume, but with specific caveats. Now, with the red arrow there, basically the director of the CFPB is saying, let me be clear, our final rule does not impose a foreclosure moratorium. The acting CFP director, his name is Dave Orejo, said in a conference call with reporters. So the CFPB has been chiming in about when forbearance is actually going to stop and all the issues that the servicers and lenders are going to face. They're basically warning everyone, saying volume is going to be there, staff accordingly, handle consumers and homeowners accordingly, don't mess up like the last housing crisis, which is positive and good because there were a lot of issues that happened in the last housing crisis when people were trying to save their homes, trying to do loan modifications, trying to get workout plans, and it couldn't get done because of the lack of staffing or sophistication, etc., at these servicers and lenders. A lot of people lost their homes that shouldn't have. They could have had solutions. But that's what happened back in the day, previous housing crisis. Now we're moving forward. So CFPB has got some caveats. They're concerned because guess what? There's a high volume of estimated 900,000 people or homeowners who will be exiting forbearance plans from September through the year end. They recognize that servicers' capability to respond to borrowers exiting forbearance will be constrained this fall and is seeking to reduce the impact on the housing market. Well, there's also people, homeowners, who will be coming out of their forbearance plans in June. So we're going to see all this sort of pick up, starting July 1st. People who were in forbearance who can no longer get any more, they're going to fall into the foreclosure buckets. They're going to be involved in loss mitigation, workout plan, flow modifications, whatever. So it's going to start. The process is already happening. And basically, the guy at the bottom arrow there says, the CFP said that more than 3% of all borrowers are 4 months or more behind on their mortgages, which is the point where a foreclosure may be initiated. So obviously, if you're 4 months behind, you're past serious delinquency, you're kind of in what we call the default status, which really means the lender now can say you've defaulted on your mortgage, and guess what? Now we can start our remedies and our actions to obtain our asset back to get the money that you owe us, which is the foreclosure process. So this is all going to kind of start now. And my thought or my comment to you is that, we've been talking about this for quite some time, and I get it. Clearly the government doing this and the COVID pandemic, everything has kind of pushed things out, but now it's actually going to happen. So, that's a positive thing because what we would like to see in the future is more inventory and more cheaper price inventory that will give choice to homeowners and consumers and push overinflated volume of sort of values down to normal, so where everybody who wants to buy a house can afford a house primarily. Okay, that's what we'd like to see have happen, but there'll be some headwinds on that as well too. Now, the CFPB's post-pandemic foreclosure rules, and I'm not too clear on this yet, but I'm assuming that they're talking about all the homes that are under forbearance and how they're going to be treated, which basically is FHFA type loans, government-backed loans, which are FHA, VA, USDA, Fannie, and Freddie-backed loans. All right, the servicers that are conventional, non-bank, so they don't fall into this. I don't think they have to really abide by some of these CFPB's rules. I could be wrong, but that's where I'm thinking this is going. Now, obviously, the CFPB is saying that a lender or servicer can start foreclosure on someone who's abandoned the property. Well, that's been going on for months now. That's no news here. Okay. They can also start foreclosure process on someone who was more than 120 days, i.e. in default, behind their mortgage prior to March 1st, 2020, which was really technically when the pandemic was coming into play and they put the forbearance stuff in during March. So if you were down more than 4 months prior to March 1st, 2020 last year, guess what? They can start the foreclosure. If you are more than 120 days behind your mortgage payments and you haven't responded to any servicer outreach for 90 days, so basically when you're behind, some of the CFPB rules dictate that banks, lenders, and servicing companies for mortgages have to reach out to clients with letters, documentation, calls, whatever. If you don't respond after 90 days, then the assumption is made that you're not responding, you don't want help, you've chosen to go down a different path, whatever that may be. They're going to initiate foreclosure, which is understandable. And the last, number 4, there are 4 rules here. You've been evaluated for all options other than foreclosure, but none are available. So what that means is that you've contacted your lender. You said, I still can't pay my mortgage. I need to do a workout plan, a loan modification, whatever. And they've put you through that part of the loss mitigation process. And in the end, whatever the offer was, either wasn't acceptable to you or your income is not acceptable to them to do loan mods or workup plans, whatever. So therefore, there's nothing else they can do for you. So now what they're going to do is they're going to initiate foreclosure. That's what's going to happen to a lot of people, because ultimately in the end, loan modifications can work if there's money coming in, and people who are still suffering from lack of income or job loss, etc. What they maybe not everyone realizes is that stimulus checks and unemployment do not count as income because they do run out. So a lender can't say, yeah, we're going to loan mod you for the next 30 years because you're getting unemployment insurance. Okay, that does have a finite end date and it runs out. So that's what goes on here. So we're going to see things start to take shape starting July as things sort of move forward now. And don't forget, there's a ton of other properties that aren't even in any forbearance that are very susceptible to what's going to happen in the future. But first of all, if you're not a subscriber to my channel, if you could please do me the great honor and help my channel grow and smash the subscribe button, I'd really appreciate that. And second, if you are a subscriber or think you are, could you just reaffirm that and subscribe again anyway? Just because obviously the past few months I've seen a lot of I'm actually losing subscribers on a daily basis, and I'm netting out to pretty much 0 or negative. So things are happening behind the scenes. So if you could resubscribe, I would really appreciate that. So thank you. All right. Interesting to note here too, forbearance reentries rise as borrowers struggle with underemployment. So as I mentioned, forbearance is this number, okay? It's this number that everyone is focusing on in mainstream media and everyone's talking about. Well, forbearance is only the people in forbearance are only a portion of the people who are in the distressed property environment right now. So the forbearance number, which is produced typically by Black Knight Financial Services, and they're updating this on a weekly basis. It goes up a couple points, it goes down a couple points. Right now, what they're saying is that, hey, there's about 2 million plus people who are in current forbearance programs. All right, realize that how that number is calculated, it's an extrapolation of samples taken from 70% of the banks and servicers out there. So the number is not a finalized, I guess you could say, real good number. It's probably got some errors and some holes in it, and we don't know how their calculation methods are how they're using what they're using to do that. So my assumption has always been, based on other numbers they've come up with for other things in the industry, is that these guys are always more conservative. So whatever they're saying, add 50% to. That's my rule of thumb with these guys. Okay, nothing wrong with them, but just I've noticed that everything they talk about is always less than other people that are commenting on statistics in the housing industry. So the point though is that people are going to, so if you exit forbearance, it comes out through these numbers as a, that's, almost like a win, like you're out of a forbearance program. Well, leaving a forbearance program because a date time stamps you out does not actually indicate whether you've solved your mortgage or distressed housing crisis. All right. So what they're saying here is the reentry. So yeah, last week I could have left the forbearance program and I'm now like a positive, win pay count on the number statistic side. But now I'm calling back up saying, I still don't have income. I need to go back into it. Okay, well then that's going to play out on this side. So you see, that's how the numbers ebb and flow, which I think are confusing at best and don't really give us the full picture, especially when we're looking at this on a weekly by weekly basis. I just find that very difficult to understand. But again, my perspective is there's more than meets the eye to this, and they're not telling us a lot of this information. And as I mentioned, don't forget, there is roughly, figure counts are like 1.8 million people who are in delinquent status, which means they're 30 days down all the way up to the day before foreclosure, that are not in any forbearance program. And I talk about that all the time. And you see, no one, when you read the mainstream media stuff here, they're not even talking about that segment. They're only talking about discussing what they can wrap their heads around, which are people in forbearance, which gives them some sort of, some sort of calculation that they can do here. But the whole point, though, is that the more people that are going to be in these programs, as they leave the programs, they time out, are going to cause problems. They're going to have problems for themselves and the lenders. So there are many people that are still sitting in deep distress, is what they're basically saying. And the fact that mortgage servicers have been sending their last rounds of notifications for forbearance to borrowers as they brace themselves for the more complex and costly process of evaluating consumers for loan modification. So yes, you can't pay your mortgage. You go down the loan loss mitigation group, which will talk to you about deed in lieu, doing a short sale, workout plan, loan modification. That's the most popular one. That's what they've tried to put you in. So the numbers have to work for them and have to work for you. You may think, oh, well, I can just pay $500 a month because that's what I can afford, but the lender wants $1,200, you see? So this is where things don't always add up. You can pay what you can afford. It doesn't work for their calculations, their numbers based on their loan pool and tranches. All right, that's the way things happen in the loan modification world. So in the end, it boils down to that, we're going to see a lot of this happening. A lot of this will be unraveling as we speak and on a going forward basis. So please keep that in mind. So, good news is that finally, well, good and bad news. Good news because the market will maybe start to shift in our favor, which is what we want. Bad news is for some people who are facing foreclosure and forbearance that it's coming to an end, and they're going to have to make some critical decisions on what they're going to do with their property and their financial future. All right, so I want to discuss this. This was my first statement on the start of the video. So yesterday I was involved in a local event here where I live in the Tampa area. Bringing some of my people in my group there, etc. And we had a discussion. It was like an interview with a gentleman who is sort of under the radar as far as being well known nationally. But I tell you, he's probably the number one investor if I take a look at people that I know. So it was really the in-depth discussion of the future of housing. This guy is a real estate investor and real estate broker. He's done over 8,000 transactions. Okay, he's done them primarily in Florida, but he also buys in other locations across the country. He's been so successful that he's taken a lot of his profit and he's moved it into passive income investing opportunities like the cannabis market and the crypto market, Bitcoin market, whatever cryptocurrencies. And he actually has a Bitcoin mining operation in one of his offices. All right. So it was a great interview, and we talked about a lot of things with people that are in the audience, etc. So his perspective here, and I want to caveat this or talk about this right away first. 8,000 transactions is a ton of transactions. Buy and sell, fix and flip, cash flow hold, the whole bit. He's done it all. Okay, so nobody that I know of, and I know a lot of big investors, good investors, like wealthy and sophisticated investors. Nobody in the various groups of masterminds, nobody has come close to 8,000 transactions. So that's that's kind of the high water mark there. So my perspective is, if this guy's talking about something, I'm going to listen. I'm probably going to emulate or model what he's saying. So from his perspective here, right? The market's peaked. He's selling off everything he can. And the reason being, if he bought it in the last housing crisis, if he bought it for cheap, and there's a market for it now, if he bought something for 50 grand, he can sell for 120, or bought it for 100, can sell for 180. Why not? He goes, because we're at the peak. The absolute peak is right now. We're in the summer selling season. He's like, sell off things that, and again, not me saying this, is him. He's saying, sell stuff off now, cash out if it makes perfect sense. All right, so he's doing that with a lot of the properties that he owns. Also, his perspective is there's going to be a significant amount of foreclosures coming in the next little while. He agrees that the numbers that we're talking about in the mainstream media does not represent what truly is happening in the real environment, the real estate market. He is preparing to purchase thousands of properties. He actually said that we're going to buy thousands of properties. How are they going to do it? Well, he's going to buy it with his own money, but also a person like him that's done 8,000 transactions has probably a pretty much endless supply of private money lenders and funders that will fund his transactions to get part of the action, to get their return on their investment, etc. So he's got access to lots of funds. So when he says he's going to be purchasing thousands of properties, he means that. He will only be buying distress. He will buy nothing retail. He's going to buy them at the foreclosure auction, so he'll do that. He will also buy them via short sales because he looks at it going, you got to get them. He goes, go to the supplier, which is the lender. So how do you buy them? Well, the lender has them under control, so to speak, because of the distress, which means give it the foreclosure auctions. Okay, so you're buying them before they go back to the lender at a better price. You're going through a short sale. The lender has to approve the short sale price, so they're still controlling the end dollar value on that. And he's going to buy as REO, which is real estate owned, which means bank owned properties. Same thing, lender controls the asset and tells you what you can have it for. You either buy those typically, that if they're on the MLS, but chances are someone like him is going to be buying these properties in bulk, going the backdoor methods into the hedge funds, the lenders, etc. So again, a lot of these transactions never, these REOs never hit the market because they're being bought by people who have inside information, access to stuff, and big money that can take out 100 of properties, $100 million of properties, $500 million of the properties, in one fell swoop and alleviate the bank stress on that. So that's what's going to happen. So ultimately, in the end, I agree with what he's saying because I've been kind of saying the same thing for the past couple of years. We were at the market peak, okay? He's identified. So yeah, he goes, I've already identified the markets I'm going to hit, Florida and across the country, and the type of homes that he's going to market to, i.e., you keep filtering down. He says there's really 4 markets, the A, B, C, and D. A being the high-end luxury, D being the real sort of messed up, tougher neighborhoods, etc. So he's going to focus in the C because where the C markets are working class neighborhoods where typically people can afford properties. First-time home buyers can afford properties. Investors want to invest there and actually rent those properties out, and hedge funds and other REITs would want to buy them as well too for that reason, for rent and for cash flow. He's going to focus on those, and he said for some B-class properties as well too, newer B-class properties that are in good school zones, etc. Because that's where people want to buy and they want to purchase. So he knows where he wants to go. He knows what he's going to look at, and they're going to target that market. That's a very it's pretty concise of what he wants to do. So for me, I'm kind of like, yes, I agree that we're at the market peak now. Yes, there'll be a significant amount of foreclosures. Clearly, I'd love to be in that realm where I'm buying, thousands of properties. We'll see, right? But again, my point to you is that this is what someone who's doing, who I think really has hit the pulse on the market for the past 15 years. He was involved in the last housing crisis. I said, I know him personally. I'm not friends with him or anything like that. He actually bought a couple of our short sales back in the day. But when this guy speaks, I listen. He's one of the few people that I actually will bend my ear to and actually understand what he's doing and go, hell, if I can do 10% or 5% what he's doing, we'd all have I'd have a great life basically. So that's my point. So I follow what this guy's doing, which really kind of vibes with what I've been talking about the past little while, and now I got to compete against him. Oh boy! But again, the whole point is going to be tons of opportunity there. So there is no competition. There'll be so many of these pre-foreclosures out there. If you want to go after them, that's not even be worried. But my point though is that when somebody who's done this many transactions is talking about where the market's headed, I believe that that this is the real deal. This is not Wall Street. This is not the government. This is not analysts or economists that are sort of talking about things. These aren't journalists who write for various websites talking about housing bubble bros and why this is not going to happen. These are people who actually do the market. Okay, they do the market. They engage the marketplace. They've done 8,000 transactions or whatever. Other people doing 3,000 for them, like tons of transactions. So to me, someone like this or a group like this understands market cycles, knows how to read the market, and it's basically, as he said, he goes, it's supply and demand. He goes, I buy low and I sell high. So I bought low in the last housing crisis and over the years with all my effort. I'm going to sell high now because I can. It's the same process. You just have to wait for the cycle. That's what he's doing with his cannabis business. That's what he's doing with the crypto business as well too. So it all just makes sense in the end. So that's the philosophy here, and that's really what I want to share with you guys, is the fact that it's actually starting now. So if I've spoken to you over the past couple of years and you've not, maybe agree with what I've said, or you've kind of blown me off or whatever, well, you know what? Time to reevaluate your position on that, because this is what's going to happen. And everyone's going, people that I know, including myself, we're going all in on this next wave of what's going to happen. Yeah, there'll be headwinds. Yeah, there'll be groups in the government will try to fight their way through it and make it difficult for us. But this will be what I call a second chance at a once-in-a-lifetime opportunity. So if you're looking to buy your primary residence, you might want to engage me, and if we can figure this stuff out. If you're looking to invest, you should surely engage me, because I'll show you how to do this and how to get at these foreclosures and these short sales. And again, nobody does this business. This business is done by less than 0.5% of the people that are out there. So Florida is a place to buy and invest. You can tell why, because the REITs and hedge funds buy property in the South, because people are moving to the South. Florida is the number 2 place where they buy all their homes for rentals, okay? This is what I hear on a daily basis. The consensus, sort of edification from what I heard yesterday from that guy. We are at market peak or beyond market peak. Retail is still moving onward or upward. So let the people who want to buy this at this rate and everything going up, let them go right ahead. Okay. Let the talking heads talk about that. Let the journalists talk about that. Let all the economists predict all that. No one's looking at the cracks in the market. No one's even acknowledging that. And that's the difference between what goes on out there and what goes on behind the scenes, okay? True investors are watching the numbers, i.e. sell now if it makes sense to cash out, and then be prepared to buy when it hits the valley again. There's more distress that's being discussed that's coming. Banks are mobilizing. Banks are already staffing up for this. They've actually got their REO agents and their servicing people and their securitization people out there, out in the field doing valuations, inspections on the properties, because they want to know what's going to happen as this all unfolds out. I've heard this from multiple unrelated sources and people that I know directly myself. So that's the scoop. So things are actually happening. It always happens behind the scene before it hits mainstream and we actually realize and go, oh, there's a market change happening. What do we do now? Okay. So for you people, please reach out, reconnect with me, book a call. We can discuss what's going to happen in the very near future. All right. How much is the stress volume going to be here? Well, listen, doing forbearance numbers are, I said, extrapolation on a small segment. Okay. We're looking at minimum 4 million foreclosures to maybe a maximum of 10 to 11 million foreclosures. Can this volume make a difference in the housing market? Yes, it can. This is what Wall Street's waiting for, everybody. Okay. They want to grab these properties before you and I get our hands on them. We need to get ahead of the game. Get ahead of Wall Street. There will be headwinds, though. Not saying this is going to be an easy peasy market where suddenly you can pick and choose. Your real estate is going to be giving you a choice of 10 properties at your front door, going pick these great price properties. It's not going to happen that way, folks. Not like the last housing crisis. There'll be more work involved, but the numbers will be there to buy. All the big investors are priming for this, so get involved, get ahead of the game, take your housing, future, in control and figure it out. All right. I talk about my local area here, Tampa, St. Petersburg, Clearwater, MSA. This is the most recent stuff that came out for May 2021. Our median price point for our traditional single-family home was up to $322,900. All right, short sales were at $264,000 and a few dollars there. That's a $59,000 difference in equity. 18% discount. This number ebbs and flows every month based on closings. Realize there was 4,700 closings of single family homes in the 4-county MSA here. Only 20 of those were short sales, which, as I said, tells us that nobody is doing this business. That's the great opportunity. That's why you need to get involved with this, all right? So 18% discounts, better than paying retail for sure. We know that we can push that discount down big time with the systems that we deploy and implement to get our short sales moving. Okay, so having said that, what you need to do is reach out to me, because I've got some training, and this is going to change now, folks. So I've talked about this for the past little while. You got to get involved with this now, because discounts right now, and my future with this is changing as we speak for the next little while, because of all the things that are going to happen in the future, right? So reach out to me for that. That's the premier program. If it's too intense for you, you want to enter in a little easier, etc., do my zombie foreclosure flip, which talks about things more distressed in a generic level. Okay, either way, they're both good programs for you to engage the housing market. I'll tell you how to engage the distressed housing market. Connect with me. Send me an email. Give me your phone number so I can call you or text you. We go from there. All right, guys. If you want to know what's happening in your neck of the woods, your location, go to gethousingdata.com. That's gethousingdata.com. That is my partnership with Foreclosure.com, who is the leading provider of distressed property listings across the nation. So you can find out who's in pre-foreclosure, who's going to auction, a tax deed auction, probates, whatever. All the distressed housing information is there, so you can take a look at what's happening in your area and understand and ascertain what you're going to need to do for the future, okay? It's a good litmus test to see what's happening behind the scenes, because it's all going to grow now as things are opening up. Some states have already opened up. We've opened up down here. Foreclosures are already being processed. Now with the CFPB, or really with the feds basically saying all the FHFA stuff, government-backed mortgages, we're going to start letting everything go. Things are going to pick up big time as we move forward. So having said that, once again, thank you for all the views, likes, comments. Please share the video with your family and friends. Reach out to me for more information, and please, if you're not a subscriber, help my channel grow and help me fight against the man, okay? And subscribe. Thank you very much. Look forward to speaking with you in a couple of days.